You know, if you want to divide a room, all you have to do is mention the word tariff. For some, they're seen as the end of global trade and long-held partnerships. And for others, the approach by this administration is resetting the field of trade. Well, our next guest has been known to trust the idea of being tested in the trenches. Who's our guest? It's Craig Bolanos, co-founder VestGen Wealth. Craig, great to see you here. And, you know, I'm just thinking some economists are warning that it's the end of the world, if you will, and others are saying, no, it's resetting the trade here. What are your thoughts? Where do you line up on this?
I think we're doing a market reset. I think we're doing a reset on trade. And last time I checked, the sun rises in a certain direction and sets in a certain direction. This is not the end. If we were at the end, I would see credit spreads blow out. If we were at the end, I would see corporate and high yield bonds retreating. I don't see that. So I think we have a lot of fear on top of solid fundamental data in today's state of affairs.
Now, we also, I know I do it. I see higher prices. I start backing off of some of my consumption. So I know I'm not alone there, but is there a concern as we move into higher prices, whether the higher prices we're at now or the potential for higher prices, could it affect the consumer?
Tony, I think the fear today is a concern over our future state. What I encourage investors to focus on is what's in the here and now and acknowledge the future, but we need to trade around data. We can't trade around possibilities. We should be focused on probabilities. And what that means is if someone is properly balanced in terms of their cash, their short-term reserves, then the drama that's unfolded from February 19th through the end of March, it's just that. It's temporary noise. But there is no greater way to compound and grow wealth than investing in great companies of America. And I think that's as applicable as it is on April 1st, just as it was on January 1st.
You talk about investing in great companies. I've got a perfect example. I thought Enron was a perfect example. I poured basically all my investment money into it. I now have a stock certificate to show for it. So how important is diversification as well?
Oh, I'm going to use a Warren Buffett slogan or euphemism. Diversification is the only free lunch when it comes to investing. So I think having a globally diversified, multi-asset class portfolio is basic table stakes for anyone who's looking to get retired and stay retired. That means have a portfolio that's durable, something that can take a stomach punch, something that's enduring. You start investing like an institution. And I think when people do that, they'll see results that are repeatable and successful.
I think since you mentioned Buffett, he had pulled out a lot of money. I think at one point his cash on the sideline was at a record high. But since then, we've started to see him invest. So is this the time to really start looking at investment opportunities when you have a little money on the sideline?
Well, it was so incredibly newsworthy that Warren Buffett had raised all of that capital, raised all of that cash. But I reminded investors who make the query, as you just did, look at what he did. He started putting that money, serious amounts of money, back into markets, specifically into foreign securities. And I think that ties back in. If someone's only investment is the S&P 500 today, it hasn't been a great run through Q1 of 2025. But for someone who participates in foreign equity to diversify out their U.S. only hedge, it's a good spot to be because the valuations are attractive. And I think it's about diversifying one's diversifiers in 2025. All of us can learn from the Warren Buffett playbook.
Yeah, you mentioned the S&P, and I'm just looking at my numbers here for the month, down like 6.1% coming into the trading session, down 4.9% for the year. But you look back at 365 days ago, and we're up 7.3%. So how important is looking at the long term and having goals as we move forward?
I I think it's about having perspective. You know, the stock market is not a safe haven. The stock market is a place to compound and grow wealth over time. That's why the monies that people have invested in equities, invested in the market, have a time horizon that's 3 years, 5 years, or more. I think all investors should always make sure they have enough dry powder. That's what I call cash, high yield savings, treasuries, corporate bonds in particular, to meet the needs over a handful of years, because you never know when the market's going to zig. Likewise, you don't know when it's going to zag, and preparedness and flexibility are the key. You got that one right.
Yeah, zig, zag, and don't trip. I guess that's good, right. Good advice. Craig, great to see you. Thanks for popping by. Craig Bolanos again joining us from Chicago. Okay, bye.